Shanghai silver prices are now at about $4 premium over what we have on the LBMA. So people in China are willing to pay a lot more for silver than we are. Um, and there's all kinds of reasons with that, I guess, economically, politically, geopolitically, etc. But they're the buyers. And so pricing, I believe, is also moving east. And so you have, I believe, because of volumes and so on, east is really going to become more and more of the determinant in terms of true pricing for especially for precious metals.
After a drop below $30 on Tuesday, silver prices made an unexpected recovery on Thursday, climbing to a daily high of $30.56. Though silver prices have dropped from the previous 13-year high reached in May, analysts are certain that the white metal is on the verge of a major breakout that will be proportional to the recent moves we've seen with metals like gold and copper, which have both hit new all-time high multiple times in 2024. According to analysts at GSC Commodity Intelligence, who have dubbed 2024 the year of the metals, there is so much hot money chasing the commodities supercycle due to heightening economic and political uncertainties in different regions worldwide. While gold and copper have had a good run, silver has yet to make new all-time highs, and there are expectations that will happen between later this year and 2025. The analysts are particularly excited about silver's supply-demand dynamics. 2024 marks the fifth consecutive year of supply deficits for silver, per the recently released World Silver Survey. Last year, global silver demand exceeded supply by about 142 million ounces. This year, the Silver Institute forecasts a shortfall of about 265 million ounces, almost double 2023's supply deficits. This is due to the surging industrial demand for the precious metal, which is expected to climb even higher in the coming years. In a recent interview with Investing News, Peter Krauth, a renowned expert in the precious metals sector, discusses his general outlook on silver prices, particularly why silver has not made new all-time highs in decades. Krauth explains that big commercial banks and other big players have been suppressing silver's price for years, but all that is about to end. The reason for this optimism is the rapidly dwindling inventories of silver on exchanges like COMEX and the LBMA. The Great Silver Bull, as he is popularly known, gives a 12 to 24-month window for the inventories to be completely depleted. With no other place to run to for their large silver demand, Krauth predicts investors will throw way more money at the few available silver supplies, which will immediately cause the metal's price to rise significantly. We will present clips from Peter Krauth's interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. Thank you, and enjoy the video.
I looked at the different major futures exchanges and the ETFs globally, all of which store silver, have what I call secondary silver inventories. And what I was telling you at the time was that they'd all been drained by about 40% overall over the last, say, 3 years at least or so. And then I've started to hear more and more talk about that kind of thing since then. So if you look at what's happened with the ETFs, that has continued. If you looked at what has happened with the different large futures exchanges for silver, the same thing has happened. And I think that the market's come to grips with the fact that that's where the silver's coming from. That is what has allowed these large consumers of silver to tap silver supplies, pushing the silver price up. And that we're potentially somewhere around 12 to 24 months of this continuing before we're going to run out of these secondary supplies. And then, all bets are off. Someone's going to try to get silver or won't be able to. And as I say, I think the market's come to grips with that, realizing what's going on. That combined with considerably higher gold price is helping to really, really move silver these days. To a certain extent, they have been drained. I'm going to say, if you look at them overall, about 40% or so drop in terms of inventories. We see that with the three major exchanges, the Shanghai, LBMA, the COMEX. And then if you look at ETFs globally, and even if you look specifically, let's say at SLV as a great indicator, SLV being the world's largest silver ETF, the first silver ETF created, has about $11.5 billion market cap. and its silver ounces held are down. I think it's something like 40% since it peaked in 2021. That's right around when we had the silver squeeze, and people went and bought it in huge amounts. I think that within a matter of a month or a couple of months, they increased silver holdings by about 110 million ounces. It was just phenomenal. It's reversed ever since then. And so we've seen, as I say, I believe that there's draining of that by larger consumers. And it also is a reflection, I think, of apathy towards silver. And I'm going to say, even despite this tremendous sort of blistering run-up we've had in the last, say, almost 3 months, but especially in the last couple of weeks when it broke through $30 and then ran to about 32, about 32.50 or so. I think that despite all of that, we still have apathy towards investing in silver. The price may have run up, and I think that in a relatively tight market, it doesn't take a lot of buying. So we've seen that price run up, but silver's nowhere near done with its run, because we have these indicators from, as I say, the ETFs, SLV in particular. It's not only the number of ounces held, but it's also the number of shares outstanding of the SLV ETF that has continued to fall even through this period. And so, as I say, there's apathy towards silver, which means it has a long way to go. It's usually when everyone's piling in, like we saw, as I said before, during the silver squeeze in late January 2021. The share count of SLV absolutely exploded. The silver holdings absolutely exploded. That was a big indicator that it was going to be a top off, and it was going to peak and then start to drop off. Well, silver has remained in a range since then, and the shares outstanding, the silver ounces held, have continued to fall. But because of those two things, as I say, there's a clear lack of interest, almost apathy. You could even call it disdain. Silver has a lot higher to go in this kind of environment.
Krauth believes silver has established a new floor at the $30 level. Though he cautions that prices could drop briefly below this level as it did on Tuesday, he adds that we will easily get back above $30. In the worst-case scenario, Krauth adds that silver prices could drop as low as $26, but nothing lower. However, he says the chances of that happening are slim. Even if it does, the recovery will be swift and permanent. For investors who feel they don't have enough silver and would like to get in at lower prices, or those who don't have any silver at all, Krauth says the best strategy is to decide how much you are willing to invest in silver and invest it in small portions over time. I'm not giving financial advice, Krauth explains, but this is what I might do. Take the amount you're willing to invest, split it into 2 or 3 tranches, and be very tactical about it. You could buy a third now, then watch what happens over the next couple of weeks. If it drops to $28, you could buy a second tranche. If it dips further to $26, you could buy the last tranche. If it goes to $28 and starts to steadily climb back, you might not wait and buy your final tranche around $30. This approach is known as dollar cost averaging, a standard practice to mitigate some risk. During the interview, Krauth also discusses silver price drivers to watch out for in the coming weeks and months.
One of the big things that I think we have to watch is what is happening on the solar side. Now, we've certainly talked about this before. Talk about it in all my interviews. You've got to watch what's happening with solar. If you look at the numbers, for example, the Silver Institute put out its World Silver Survey about a month and a half ago, and they basically indicated that solar grew, the demand for silver for the solar industry grew by 64% from 2022 to 2023, which is just absolutely phenomenal growth. We haven't even accounted for the fact that there's this transfer or this transition towards higher consumption of silver because of technology changes in the solar panel industry. So we're going from what has been the standard, which is something called PERC in terms of technology for solar panels. We're moving to something called TOPCon, which requires up to 50% more silver per panel. And then eventually we will potentially transition to another technology called HJT, which requires up to 150% more silver. We've seen thrifting in the industry. The producers of solar panels have been naturally squeezing out the amount of silver. They want to cut costs as long as they keep the energy output the same. And they've gradually managed to do that over the last 10 years. It's kind of fallen, and then gone sideways and flatlined. I think once we ultimately see perhaps numbers for this year, maybe that's only later this year or early next year, we're going to see silver per panel overall manufactured per year start to climb back up. And that's because of the switch in technology. China obviously is the dominant force, like in so many things. 80% of manufacturing capacity is in China, but we need to watch carefully what's happening in India. They are going to triple their solar manufacturing capacity between 2024 and 2027. They've recently announced that they're going to build the world's largest renewable energy park in India, in Gujarat state. It's going to be 5 times the size of Paris. India is a very, very savvy silver buyer, investor. They have imports their imports of silver in February alone of this year was over nearly 71 million ounces. That was 64% of their entire 2023 imports. So maybe this renewable energy park has something to do with it. They're going to need a lot of silver for that. It goes beyond that. As I say, they're savvy investors and buyers. They buy when it's relatively cheap and they tend to sell when it's relatively expensive. It's been cheap for quite some time. They've been loading up. In fact, 2022 was an outsized year for Indian consumption. Silverware, silver jewelry, silver investment, coins and bars. That actually dropped back in 2023. And people are saying, there's no more interest on the silver jewelry, silverware, silver investment side. That's completely wrong, because it's dropped back to levels that were still above the year prior, which was 2021. So 2022 was really an outsized year for these categories. It dialed back in 2023, but as I say, it dialed back to levels above 2021. So we're still seeing growth, even if we completely eliminate what happened in 2022. It was really, as I say, a truly outsized year. And Charlotte, one last point. The International Energy Agency is forecasting that India is going to experience the largest energy demand growth of any country or region over the next 30 years. China has been a dominant factor in this space. I think we really need to start to watch what's happening with India as well these days.
Okay, so we're keeping a close eye on solar and we're watching India now in addition to China. And I think this is going to be maybe a fun question. We'll see. So in copper, I see all the time when they're talking about copper demand for electrification, you'll see various ways of quantifying that, such as, we need X number of copper mines to feed this demand from electrification. Has anyone done that kind of math on silver? Just because I find it kind of helps me visualize what is coming.
I hadn't seen that, actually. That's a great point and very interesting. I haven't seen anybody say, okay, we're going to need so many mines, right? And silver is perhaps very difficult to do that with for a few reasons. One is that, as you know, only about 30% of mined silver comes from what are called primary silver mines.
Krauth believes the bull market is just starting, and there is adequate evidence that it'll be sustained for an extended period. In another recent interview, the metals analyst shared 2 important factors to support claims that we are now in a full commodity and resource stock bull market. The first is how gold broke out to set a new all-time high across all major currencies. Peter says this tandem shows a lot of strength, which is very bullish for the precious metals sector. This could potentially lead to significant returns for investors, sparking optimism and excitement in the market. The second is the low market sentiment. Despite significantly higher prices for both gold and silver, FOMO has yet to kick in. If anything, retail investors are showing a lot of caution, especially for silver, because of the performance of the previous years. Krauth believes this shows strength rather than weakness for both metals. Please share your comments and observations in the comments section below. Also, give this video a thumbs up, subscribe to the channel, and turn on the notifications bell so you get notified every time we upload a video. We appreciate the support and see you in the next one.